Welcome to the Trading Lounge and the Day Ahead Report. And here we're looking at the S&P 500. There's a couple of important announcements coming out today, and that's the manufacturing figures for flash manufacturing figures for China, the US, Germany, and also France as well. So those headline news will dominate the short-term direction. So just bear that in mind. And of course, we've also got our Remembrance Day for Anzac on Thursday, so we may see lower volume on the Wednesday for that, as people will be taking Friday off and increasing their long weekend as well. So just bear that in mind. Right, so looking at the wave count for the S&P 500 is that the 61.8 retracement level is around the 1570 sort of area there. We'll be looking at 1572, of course. The better way to count this to the downside, we still don't know if this is wave A or wave 1 to the downside through here. But the best way to count this is down for 1, back for 2, down for 3, back for 4, and then 5 waves down for wave 5 here. I know that wave 4 is a little bit large here, but when you look on the cash market, it's not as large, but still technically it's still fine and working because it hasn't overlapped the wave 1 here as well. So we need to look at this as a 5-wave structure to the downside. Just don't know if it's wave A or wave 1. That will become apparent a little bit later on, and it doesn't really concern us at this point either, because both counts will pretty much do the same thing. So we're looking for a corrective move back to the 1572 area through here. The S&P 500 has rallied much more than the Dow Jones. As such, this is the in fact, well, I'll just go over this actually while we're here. This is just the wave count. So from the high up here, we're looking down for wave 1, wave 2, wave 3 here, wave 4, and wave, well, 1, 2, 5 waves here for the third, the ABC for the fourth, the fifth here. And then we're looking for the ABC to the upside. There's a couple of ways to count this, but I just want to see, let's just see how it sort of settles into to this area through here. I mean, that there should be one more little push in through here. If we, maybe not, maybe the the 1, the 2, the 3, the 4, and the 5 up here, but it does look like a 1 and a 2 here and a 3. End of the session coming in here, 4th but 5th. So look, bottom line is that it's still impulsing to the upside through here for this target range up through here. So we just really need to allow that to play out. And it's the same with the Dow Jones as well. Now, with the Dow here on the CFD, we got this as a low, but on the cash market, this is a low through here. So it would be, look, if this was the low on the cash, we'd be looking at this as an ABC for the A wave, and then the B wave, and then a C wave up through here, which is really lagging for the Dow Jones. So we know that there's pressure there. Once again, once the 14,500 becomes the retested resistance, we'll take the shorts from that point there. The European markets, in a bit of a nutshell, the DAX here has got manufacturing figures coming out today. But look, quite simply from this structure here, we've got down for wave 1, back for wave 2, the third wave here, nice strong third wave, but it's the 1, the 2, the 3, the 4, and the 5 here. This is all a wave 4 here, so we should see a wave 5 follow this down into the 73 area through there. In fact, the wave 1 here should really be roughly the same distance as the wave 5 here. So we're looking down. I had the 72 as a sort of area that I'm sort of like thinking of, but look, probably nice sort of short there. The same with the FTSE at the 63 mark. Let's just have a bit of a look at that. So the 63 here, just staying focused and forgetting about the wave counts and things, is that 63 is the balance line through here. We've got an equal swing above, an equal swing below. So we'll continue to swing in here, and this will find itself as support or resistance. You just need to allow it 3 swings. It'll find support or resistance. Then you'll use group 1 here to build a long trade, or group 2 here to build a short trade, and the 62.72 is the key for that point there to build that side in there. The Australian market This is just the daily chart here. So what we've been looking at is, on the daily chart, we've been looking at a 5-wave structure to the downside. Once again, first of all, that's not a wave 2 there, so I'll just change that while I'm here. So the situation here is that we do have 5 waves to the downside, so we can call that the A wave for a corrective A, B, and C, or wave 1, 2, 3, which wave 3 would be down much further, and 4 and 5. We don't know that just yet, but we'll stay with what we've got through here. Because we've got the 5-wave structure here, we should see another 5 waves over here. Now, from the A wave here, or wave 1, we're coming back to B or 2 here, and it will be in 3 waves as a corrective waves are. So we're looking for an A wave, a B wave, which is probably complete now because a B wave is always in 3 waves, a smaller A, B, C here for the B wave, and then a wave C up. The wave C up would be looking at the 61.8 retracement level, which is around the 550, 540 area through here. So that's what we're sort of looking through there. Will it get there? It's a little bit tricky to say because obviously we've got trendline resistance through here. The rally in the S&P 500 just about done and dusted. We're expecting the FTSE and the DAX, and there's a strong relationship with the FTSE and the DAX, well, FTSE mainly, to the Australian market here as well. So, you know, it could really struggle at this point through here and also roll over here. And if that was the case, then we have to put that wave B to there, and would have to count that up as in 3 waves to the upside. But it does, you can do that, but it does count better as a 5-wave structure. So having 5 waves here would give us another 5 over here. And in fact, there's a couple of things here, that the A wave has normally got a relationship to the C wave in terms of equality. So if that was the case, that would bring us further up into this area here, the 78.6. And there's also a gap up through here as well. So look, first things first though, if it can find support on the 5,000, then we can look at the structure and see how far it's going to move to the upside. So pretty much this is it here on the 4-hour chart here. So we've got our wave A or wave 1 through here, and then we're looking at our little A, B, C for the B wave, and up for the C wave at the 61 there, but it can go to the square root of 0.618, which is the 78.6, which also covers this gap here as well. So pretty mindful about that, but let's just see how we get through this this resistance area through here first. In terms of trading this, the general idea with moving up through the levels here, just on a 5-minute chart. Yesterday we were looking for support on top of Group 1. So if you know Group 1, 10, 20 and 30, if support is found on 30, then you trade to the 50 and you get out. Then you wait for support, and that's support there, and then you trade to the 72 into Group 2 area here. You wait for that to become support, like it is now, and then you build the trade from above the 72 and add on the 80, and looking to get to the close to the 5,000. The 49.79 is plenty, but as I've just mentioned here before, there is a you could refine this much further, but there is trend line resistance from this point, from that point to here. So there is going to be that resistance there. So just bear that in mind. Now, if we had to put this B wave here, wave 2, over to here, then we'd end up with a different count, and this would be the count here. So this would pretty much be a wave. This is just a different count, but an hourly chart down for wave 1, back for wave 2, 5 waves down through to here, and this would be seen as an ABC rally through to here. So once again, really finding resistance through here. And if that's going to be the case, and we're looking for short trades, because we always need to be mindful of we don't want to marry one side. We need to trade what we see. But if this midpoint here, the midpoint's the 55, second strongest number, 49.50, if that became the retested resistance there, then we can start looking at gleaning a few short positions there and looking to add further down, and that would line up with the FTSE, the DAX, and we'd still need to see the S&P 500 roll over. So as I mentioned, we got figures coming out from China today, and I just wanted to look at the Shenzhen market here for a moment. Now, the Shenzhen market, we knew that when it was arriving up to the major trading level here, 1000 or trading level 1, we knew that it would have some type of corrections, and corrections in a bull market are normally in 3 waves, so we're looking at it like that, and eventually the high here would be taken out through here, but it will stick around this for a little while. But we should expect some sort of 5-wave structure up here, because in terms of when you're working with large numbers, you have the arrival, you have the reaction, you have support, then you have the first high above the level, and then you have a larger correction from that point here. So that's what we'd be sort of looking at through here. But this move up through here is leading the way. The Shanghai is not as strong, so this is the Shanghai here. You can see that it's pulled back further. We were looking for this at the 61.8 retracement level, not quite there, but somewhere in here, the 50-60, and we got that. And we've seen this market move down, the Chinese market move down on lower volume through here. So lower volume in a downtrend tells us that, well, a lack of sellers basically. And now we're seeing volume move into the upside. It's just a spike so far. We need to see continued volume through there, but this pattern does look corrective, so we should see it move up through there. Once it sits on the minor trading levels, which would be the 2,300 there, then that would be support on top of Group 1, would see it up to 2.5 then. Of course, what this will do, obviously good figures have got to be coming out from here, and this is obviously going to boost the Australian market to the upside. So that said, if we do get support on the 5,000 here, we do see the Shanghai, and the Shanghai is dragging its feet. The Shenzhen is leading the way. If this does push up through here and we find support on the 5,000, then we'll be bullish from that point. But as you know, being under the 5,000, we need to have a bearish bias, and we'll just consider this the retest as a failed retest here, having another crack at two retests here. If it did fail from here, then it would move down quite sharply from there. So we need to be flexible, and we need to move quick as well. So the China CFD that we're tracking now from GFT, still quite new out on the market here. We're tracking the Hong Kong dollar rather than the US dollar because there's more volume in this. And what we're looking for here has got the same pattern as the Shanghai, and moving much closer to the Shanghai rather than the Shenzhen. Still getting to know this particular product, but what we're looking for here, as we mentioned yesterday, we'd seen this little move up here and this retracement back and this move up here. So it's really got the makings of a 5-wave structure to the upside. We want to see a corrective pattern pull back across the midpoint here. 5 is always the midpoint, 5 being the second strongest number. So we want to see a corrective pattern across here. It'd be nice if it does come down through the 500 and then gain support on here, because then it's tested lower. We know there's buyer's demand there, and then we can move up from that point there. Let's have a look at commodities, as they are still weaker as the US dollar pushes higher. Okay, starting with the copper market as being central to all the base metals and so forth. So as you can see, the trend is down, and it's been down for quite some time, and we've been counting it down. There's still more wave structure here to the downside. It's just that coming into this major trading level here, and we're just going to see it bounce around, and we're seeing it bounce around in Group 1 here, the 10, the 20 and the 30. It's doing everything that it's supposed to be doing. Normally when it finds resistance in the pivot within Group 1 is always 1, 2 and 3. Once resistance is found at the pivot here in the center, then it normally moves lower through here. So like BHP in Australia at $30 and BHP in the US at $65, the medium level. You know, we see these guys edge lower, even though that there will be bounces, but those bounces will just be rallies. So just be a little bit careful about that. So look, these will continue to edge down, but not as quick as this, what you've seen here. They will just bounce around and edge down through here. So it's really important that you don't get chopped up in the material sector there. So if you're on the long side, give it plenty of space and so forth. So when we look at the oil market, the oil's tracking the S&P 500. So we're seeing the rally continue, and this is the 38.2 retracement level for the wave 4 that we're looking at through here, around the 89 here. But of course we've got to use 90, which is the medium level, halfway between 80 and 100. So we just need that to play out. That's just going to follow the S&P 500. Of course, the US dollar will have some sort of drag on it, but it will more likely follow the S&P 500. The US indices, basically oil follows stock, and that's it. But looking from up here, we're looking for the wave 1, the wave 2, the wave 3, the wave 4, and still down for the wave 5 here. So short-term rally. But look, all the markets, all the commodities have been in this little rally through here, as is gold, and it's not complete just yet. We're just looking for that high. If we bring in the sort of bigger picture here for a moment, and this is really typical. So this strong move to the downside through here, in any market that falls out of bed this quickly, there will be value buyers coming in and short covering and so forth, but it will run out of steam and it will roll over and test lower. So it's just the way the wave structure works. So just bear that in mind. So on the way up through here, we've been looking, in this move coming down through here, it's all counted on our site, but we are looking for a wave 4 to the upside, an A and a B and a C wave through here. None of these all these little structures here are still impulsing to the upside. An impulse wave is 5 waves. You can see a little 5-wave structure in here. So what we need to see is one of those to the downside coming down through here. So it's still got further to go to the upside. The 38.2 retracement level was at 1425 roughly, but the wave 4 of 1 lesser degree is 1, 2, 3, 4 is actually just here. So it can go. It can go sort of higher through here. So it is, it's trending up through here, but we're considering this a rally as all the commodities as such, and they just need to go their distance. And look, there's nothing stopping you trading to the upside. You just need to know what price point you're working from. So if you're working from 1400 here, then you would need support on top of subgroup 1, which would be 1430. Tested support on 30 would get you to the 50. Okay, so look for there. Just be careful of the 144 here. That's the number that Gann and Fibonacci or Elliott meet at that number there. It's that 72 works in the market, so 144 is there as well. So in terms of geometry, it will be a sticking point there. In the bigger picture, using the trading levels, the 1500 here is the medium level, and that's really what the market's looking at. That's what it's looking to retest. That's the finishing line for it. Will it get there? Well, let's see how it goes. And in getting there, it would need support on 1430 first, and then it would trade to 1450. It would have a reaction at 1450, and if after that it found support on 1550, then you'd be looking at 1480. 8 is a profit-taking number because it's the first even number before the next whole number, and so forth. So that's how that's sort of playing out. The silver market is kind of doing the same sort of thing, really, but a bit more lazy. It hasn't really moved off. It doesn't mean that it won't. So from this low point here, we're looking at some sort of A, B, and C rally up through here. At this stage here, we can see that this little pattern through here is in 5 waves from the last low, so that's actually an impulse wave. So that's a positive thing to the upside through here. We will get an A and a B and a C back into here, but just keep an eye on that, because if gold does move higher and silver sort of is not really following it to the upside, it eventually will. So just be mindful of that. And of course, you'd use the sub levels through here as well. 23.30 would be the sub level that this would retest into, and then if support was found on the midpoint, the 23.50, then you can run from that support. 5 being the second strongest number in the market, you would want that. But first of all, it would retest this 23.30 in through here. This looks like 5 waves to the downside here, so that means it would produce another 5 waves as such through here. So let's just have a closer look in here. The 1, the 2, the 3, the 4, and the 5. So an A, B, C in here, and then another retest down through here. So up for 1, 2, 3, 4, 5 impulse wave, an A and a B and a C back into here, and then a move to the upside. So still further to go there. And the gold and silver will be following the S&P 500. So if the S&P 500 stops at wherever it stops, like musical chairs, then you'll see these guys roll over, because the US dollar is moving higher. If I can just find it in here, but we'll look at this shortly through here. So it's moved to 83. That was our target there, and of course it will have a reaction and display a corrective pattern through here. So while this is pulling back and correcting through here, we will see those commodities move higher. But let's have a closer look at the FX. Okay, so this is the US bonds, and the notes will be the same as well, but they will follow the US dollar. And just what I wanted to point out here on this 2-hour chart with the US bonds here is that the June contracts is just to see that this trend that's moving up through here is expanding, isn't it? So this sharp move up through here is seeing increases in size here. So basically, like a tree growing, everything's sort of expanding to the upside. Everything's getting bigger, and that's the sign of a trend. Of course, the 8 is a profit-taking number, so it will get hit here. But once it finds its feet, it will move up to the next strongest number, which is the 150 here. But while the US dollar is, as I mentioned before, having arrived at 83 here, then it's going to have some sort of reaction here. So any reaction here is going to see the euro pull, rally to the mirror opposite, so to speak. This move to the upside that we're looking at through here, we don't know if it's impulsive or corrective just yet. So what I mean by that is that this move down through here just may be one leg of the E wave. So that E wave may not be completed. We may end up having a situation where it's like this here. Do you know what I mean? It's just gotten larger. So that's what we're sort of working with at the moment, and that would be the same for the euro. So if we have a look for the euro over here as well, the euro here, we've got from wave 2 here, we've come down for the next wave 1 down. We understood that this was a corrective pattern. It had overlapping wave structures, so we understood that in due course it'd be finished here, and then move lower. Now, that being the case, this just as I pointed out with the US dollar, this may be the case here as well, where this particular wave 2 here may have to come over here, and this A, B, and C here just got 1 degree larger in terms that this will be the A wave, this will be the B wave, and this will be the C wave here, and then we roll over from there. And the reason that I'm pointing that out for is because we've got a small impulse wave that's moving up through here, this 5-wave structure. So if we do get a 5-wave structure to the upside as such, then that will be followed by, if we got 1, 2, 3, 4, 5 here, then we'll get an A, B, and C, and then we'll get another 5 to the upside through here. So that's what we would be looking at through here, but there'll still be a 4th and a 5th here. So we're looking for a C wave up here in 5 waves that would bring us back up into this area here. So that's a real possibility as such. Just zooming in here a little bit further. You can see here that on the 5-minute chart from the low here, we can see up for wave 1 through here, the ABC for wave 2 here, nice strong third wave up through here, the fourth wave through here, triangle, and A, B, C, D, and E here, an Elliott triangle, and then up for the, no, it's not, it's just a flat, beg pardon, it's an A and a B and a C here. I can see the little 5-wave structure in here, and then I can also see the 5th wave here in terms of the 1, the 2, the 3, the 4, and the 5. So we should see, in coming into group 2 here, we'll see resistance through here. We should see a zigzag through here, a 5-3-5 structure, and then further to the upside. If, however, the 30 down here becomes the resistance through here, then we're on track with our wave count and will continue to the downside. This light gold will be rallying with the S&P 500, so they would all be expected to roll over together. Once again, the manufacturing figures coming out from Germany there, and also too, as I point out in the DAX is due to go to the downside, which would obviously give a bit of support for the euro dollar here as well. So keep an eye on the DAX with this as well, and the S&P 500. They'll all be pushing and pulling there, but those manufacturing figures coming out for Germany will have bearing on the situation. The Australian dollar is pretty much on track here. As you know, we've been working through. This is wave A or wave 1 here. We worked through the A, the B, and the C wave up through to here to have shorts down through to here. Now this should continue to the downside. Now, one of the important things here with the levels is that this orange line here, the 102.72, 72, as you know, carries a bit of weight. The 272 or the 772 carry even more weight, and that's what we're seeing here as well. So what we're seeing here is that it was support up until this point, and this is its first interlude of looking at this market as resistance through here. Now, it's not a failed retest at this stage here, and also like the euro as well. The euro's got 5 waves moving up, and this one here has only got 3, but it looks like it will turn into 5. So if we do get 5 coming up through here, then we'll get an ABC back, and then we'll get another 5 up through there. So if we can look at that. This can be, yeah, look, it's a bit confusing. It can be counted as corrective or impulsive, but in terms of up for 1, back for 2, up for 3, and A, B, C for the 4th, and up for the 5th here. So that would be counted as an impulse wave here. But what I'm sort of really looking at here is that this little pattern here is actually corrective. So we will see new highs, and we're working with the 72. So 1072 here, that as support would create the long trades from that point there. So if you haven't caught it from the midpoint, you can catch it from this point here. Alrighty, so just to sort of recap a little bit, the S&P 500 61.8 retracement level at 1572 or thereabouts is really important. The Dow is dragging its feet there, so you know that is a sign of that divergence, is a sign of weakness there. There is from our side of the fence in Asia here, there is momentum to the upside coming from China. We just need to see a bit more of that. But once again, as I mentioned yesterday, the manufacturing figures that are coming out for China, US, Germany, and France are really going to be headline news. They're going to be the catalyst for the short-term direction today and tonight in the market. So you really need to be there to trade. You need to trade what you see. You need to understand what retested point, be it support or resistance, exactly what price point that you're working from in terms of trading. We will keep trading on the robo and so forth at a real minimum, because we know that we're in a corrective pattern in the markets. We're not in a trend, so we can't just shovel it in. We need to be flexible, diligent, and less is more in terms of trade size. Good morning, good luck, enjoy the day ahead.